What if I told you that there's a way for you to earn 400 times more interest on your savings account without any extra effort? Well, hang out for a bit because I'm about to show you the secrets of high yield savings accounts that the big banks don't want you to know. This year, I'm set to earn over 4 figures of passive income just by choosing the right savings account. And today I'm going to show you exactly how you can do it too. What's up, everybody? My name is Rashida and I'm your guide to smart money moves. And in today's video, we are going to take a look at a financial game changer that could mean the difference between you earning pennies or pocketing hundreds, if not thousands of dollars every single year. We're talking about high yield savings accounts, and trust me, they are having a moment right now. With interest rates higher than they've been in over 15 years, there's never been a better time to make your money work for you. So today we're gonna cover the top high yielding savings accounts that are reshaping the way we save. How to earn up to 400 times more interest than your current savings account. I'm going to highlight some of the surprising features that some of these accounts offer that go way beyond just high interest. And I'm going to give you a step-by-step guide so that you can choose the perfect account for your unique needs. Plus, stick around to the end because I'm going to reveal an account that blows everything away when it comes to high interest, all right? And you don't want to miss out on that. So if that sounds like something you're interested in, let's go. But first, before we dive into the high yield savings accounts, I gotta get something off my chest because I still see way too many people making these mistakes when it comes to parking their cash. So before we even dive into the high yield savings accounts, let's talk about where we definitely don't want to be keeping our hard-earned cash. And so here are the 5 worst places to keep your savings. Number 1 is going to be in your house, under your mattress, in your closet. First of all, if you're doing that, the money is not earning interest, okay? So that means that your money is actually losing value every single day due to inflation. And if you've been doing that over the last 4 years, that money that you have stashed like that has seen a significant decrease in its spending power because we've just gone through the highest rate of inflation that we've seen in over 40 years. Another reason you shouldn't keep your savings inside of your house is because that money is vulnerable to theft and damage. All right, if somebody burglarizes your home and they get that money, it's gone forever. If it burns up in a house fire or floats away in a flood, then that money is gone forever. And good luck trying to convince your homeowner's insurance company about that $100,000 you had stashed in cash. So it's okay to leave a small amount of money in your house, maybe like $1,000, but you don't need to be keeping more than that. The second place you do not want to leave your money is in a traditional savings account, all right? They pay extremely low interest rates. The national average right now is about 0.25%. And the largest banks in this country pay much less than even that. In that case, for every $1,000 that you save at those banks, you're gonna earn $2.50 per year, which means that money is still losing value against inflation. The only use that I can see for those type of accounts is to set one up for a little buffer against your checking account so that you never have to be subjected to any sort of overdraft fees. And number 3 is a certificate of deposit or a CD. So while these do offer slightly higher interest rates, they offer limited liquidity. That means that you can't withdraw your money in an emergency without paying some sort of penalty. That is not suitable for an emergency fund because you're not gonna have quick access to that cash, and that is the whole point of even having an emergency fund. All right, and number 4 is permanent life insurance. These include whole life, universal life, and variable life insurance. These things are often marketed as some sort of savings vehicle, but they're actually pretty terrible for that purpose. These policies typically have high costs and commissions that are gonna eat away at your returns. Your cash value will vanish from that policy if you fail to pay your premiums. Your family may not get the cash value when you die. And number 5 is gonna be stock and investment accounts. While these are great for long-term wealth building, they're way too risky for your short-term savings. The value in an investment account can fluctuate, all right? And that leaves you at risk for having less than you put in when you actually need it. That means that if you need it in an emergency and the value is less than you put in, you're gonna be forced to sell at that loss, and we don't wanna do that. Remember, your emergency fund is actually an insurance policy. It's not an investment. So whether you're saving up for a dream vacation, an emergency fund, a wedding, or you really just want to make your money grow a little bit faster, this video is going to be your ticket to a little financial optimization. And so without further ado, let's get into it. Now, at its core, a high yield savings account is just like a traditional savings account, except it offers a much higher interest rate. So if you are holding your money in a traditional savings account at a big bank like Chase, Bank of America, or God forbid, Wells Fargo, they are only going to pay you about 0.01% annual percentage yield, okay? Whereas if you have your money in a high yield savings account, they are going to be offering you right around 4% per year, all right? That is a massive difference. And here's what that looks like in real terms, okay? Let's say you have $10,000 in a traditional savings account. At that percentage of 0.01% per year, at the end of the year, you gave them $10,000, they're gonna pay you $1. If you have that same $10,000 in a high yield savings account, at the end of the year, they're gonna pay you $400, all right? $1 versus $400. The choice is easy. And so now let's take a look at a more typical amount found in an emergency fund, okay? So let's say you have $30,000 parked in that traditional savings account, all right? At the end of the year, they're gonna pay you $3. If you have that $30,000 parked in a high yield account, then you're gonna be getting $1,200 per year. You could be using the extra $1,200 a year to pay an extra mortgage payment, pay down your car note, take a nice little vacation, just from choosing the right account. Everything is not always about working harder, guys. It's about making smarter choices with the money that you already have. By moving your emergency fund to a high yield account, you're essentially giving yourself a little raise, all right, without having to work extra hours or finding a new job. Now, before we dive any deeper, let's clear up some of the common myths or misconceptions that people have about high yield accounts. 1, they're too good to be true. These are typically, like I said, online banks, and so their costs are much lower than your traditional banks. They pass that savings on to you. Number 2, my money isn't safe. False, okay? All of the banks that we're gonna discuss today are FDIC members, all right? That means your deposits are insured just like a traditional bank account. Number 3 is that they're only for rich people. That is absolutely not true, okay? You don't need a fortune to open up a high yield savings account. Many high yield accounts have no minimum balance requirements. It's too complicated to switch. No, this is not true. Actually, opening a high yield account is super simple. You can do it in 5 minutes, and a lot of times it's easier than getting one established at a big bank. You don't have to go into a branch. And number 5 is my favorite. The rates don't really make that big a difference. Guys, even 1% difference in your interest rate can mean the difference between hundreds, if not thousands of dollars over time. All right, so now that we busted the myths and we know where to not put our savings, let's talk about the best places to put your money to work. But before we jump in, please take a minute, see if you've subscribed to the channel, all right? And if you haven't, please consider subscribing, hit that notification bell so you don't miss out on any of my future videos. Thank you. Now let's get back to it. All right, now let's get into it. These are gonna be my top picks for the best high yield accounts. We're gonna start with the lowest APY and work our way up. And I'm going to highlight some of the unique benefits for each account. Let's kick things off with Ally Bank. And while they may have the lowest APY on this list at 4%, they are actually bringing some serious innovation to the table. They have no minimum balance, no monthly fees, always a plus. But now let's break down their standout features. Ally has this feature called savings buckets. So imagine your account as this big piggy bank, okay? But instead of one large compartment, you have several smaller ones inside. That's what Ally buckets are like. You can create up to 10 of these buckets in your account with each one having a specific savings goal. So let's say you want to save for a vacation, a new car, an emergency fund all at once. It's no problem. You can easily track all of your progress for each savings goal within the same account. And so I think that's pretty cool. It's like having multiple accounts without the hassle of actually having to open all of them. Another great thing that Ally offers is roundups. This feature is like having a digital change jar. And so anytime you actually make a purchase with your Ally checking account, they're gonna round that purchase up to the nearest dollar and then transfer that change into your savings account. You bought a coffee for $3.50, Ally's gonna round that purchase up to $4 and put the 50 cents into your savings account. And while it may not seem like much, those small savings really add up over time. And another feature that they offer is called surprise savings. And this is where things get a little interesting because I've never even heard of this before. Ally will use some sort of fancy algorithm to analyze your checking account, and that checking account doesn't have to be an Ally account. It looks at your spending and income patterns, and then it figures out safe to save amounts, which are amounts that you probably won't miss. They take those small amounts with your permission, and then they move that into your savings account. And while again, it may not seem like much, this stuff adds up pretty quickly over time. So for example, let's say you usually go out and you spend $100 a week on groceries, okay? But this week you only spent $80. Well, this feature is going to spot that extra $20 that you didn't spend on groceries and move that to your savings account. Because it's gonna say, hey, you probably won't miss that. And with your permission, they're gonna automatically transfer that to your savings account. And so I think that's pretty cool. I think it's like having a little advisor 24/7 watching your account and figure out ways to optimize your savings without you having to do anything or lift a finger. And they do have some safeguards in place, like they're never going to transfer more than $100 at a time, and they never do it more than 3 times a week. And so it's not like they're ever gonna wipe out your checking account. Plus, you can always just turn the feature off if you're not comfortable with it. And so features like these really make Ally a strong contender, even though they have the lower APY, because Ally is actually actively working to help you save more. And coming in at number 2, we've got American Express. And I know you guys are all super familiar with their credit cards, but their savings account is worth taking a look at. They are offering a solid 4.25 APY. No minimum balance, check. No monthly fees, double check. They allow up to 9 withdrawals per month. All right, typically a lot of savings accounts want you to only limit that to 6. And one of the best things about being a part of American Express is that you have 24/7 access to their world-class customer service. Now, their checking account actually offers a 1% APY. That is crazy high. That's pretty much like unheard of. Most checking accounts don't offer you any interest at all. They're giving you 1% APY. And remember, you get to earn American Express rewards points, which are very coveted in the travel points world. Coming in at number 3, as we move on up that APY ladder, we've got Marcus by Goldman Sachs. I mean, these Wall Street folks, they know a thing or two about making money, don't they? Marcus is offering a very competitive 4.25% APY. Again, no minimum balance, no monthly fees. Sensing a pattern here? Marcus actually offers the benefit of unlimited withdrawal. So you're not capped at 6 or 9, and they have a very user-friendly mobile app, which I really like. It's sleek. But here's where Marcus really shines. They offer same-day transfers up to $100,000. And that's to any bank. And so if you are somebody that likes to get your money fast or you need it fast, Marcus has your back. You don't have to wait 2 to 3 business days for that money to move from your savings to an outside bank. Now moving on, we're getting into some of the higher yields with SoFi Bank. SoFi is really shaking things up with their combining your checking and high yield savings accounts. So at SoFi, we're looking at a 4.5% APY on that savings, all right? Now, when you open that account with them, you're actually going to have to open a checking account as well. And when you open that checking account with them, they're actually going to pay you 0.5% APY. So that's 0.5% for your checking account, all right? Another unique thing about SoFi is that they offer FDIC insurance up to $2 million per account. That's 8 times more than anyone else. And if you sign up for these accounts right now through SoFi, they're actually offering a $300 sign-up bonus. All right, now let's break down the things that really set SoFi apart. SoFi Vaults, all right? This is a personal money organizer. But with SoFi, you actually get to set up 20 of these within the same account. Again, each one for a specific savings goal. Another cool feature is that they allow you to set up automatic distribution of your paycheck. When your paycheck comes in, it automatically gets divvied up and sent to the different accounts or vaults that you specify. So it really has your savings on autopilot. So for example, if your paycheck is $2,000, you can have $1,000 going to your bills, $500 going to your vacation vault, $300 going into a new cell phone fund, and then another $200 can go into your emergency fund. You can have recurring transfers turned on. So if you wanted to schedule regular transfers to your vault, you can do that kind of like based on time. So if you want to do $50 a week for date night, $100 a month for car repairs, you can do it automatically. And you can actually set up shared vaults. So if you and your significant other don't share an account, you guys can actually share a vault, all right? And you have instant access to your vaults, so it's not a vault that locks money away for any amount of time. The money is always available. You have visual tracking on your vaults, so you can actually see your progress for each goal on the SoFi app. And across all vaults, you're gonna get that same 4.5%, so the interest is gonna be consistent. And I really think that the vaults and the buckets feature are really cool because it helps you to avoid that one big pot issue that you have with a savings account, especially if you've got tens of thousands of dollars in there, all right? It's gonna help to make your savings a lot more organized, and it's gonna help you to avoid spending money that you should have earmarked for specific goals. Now, other features that SoFi offers includes access to free financial planning sessions. You can get your paycheck up to 2 days early, and you can earn up to 15% cash back from certain retailers just by using your debit card. All right, and next up we have a bank called Laurel Road. All right, they are offering 4.8% APY. Wow, that's a lot. They also offer no minimum required deposit, no monthly fees, also FDIC insured up to $250,000 on your deposits. This is actually the online banking product from KeyBank. KeyBank is a well-established bank. They have over $280 billion in assets under management, so your money is not in some rinky-dink establishment, okay? And so remember, while APY is important, it's gonna be crucial that you consider all of the features when you pick the account. Think about which benefits actually align with your financial habits and your goals. Now, if you've made it this far in the video, I am about to reveal to you an account. There is a federal credit union that is paying 7% APY. That is the highest in the country. And coming in for our final one, the OnPath Federal Credit Union is offering that 7% APY. That is jaw-dropping. The OnPath High Rewards checking account that offers 7% APY is insured. It has NCUA membership, which is basically the National Credit Union Administration, okay? All of your deposits are insured up to $250,000. Now, this is a checking account and it has no minimum deposit, no monthly fees. Now, if you're interested in this account, there are going to be some caveats to you being able to get that. First, you got to become a member of the credit union, okay? You need to give a $5 donation to their foundation. That's also pretty common when it comes to credit unions. Now, the 7% that they're offering is only up to $10,000, okay? Because once you go past that amount, you're only getting the 0.01% that all the big national banks are offering. Other requirements that you have to meet is you've got to log into your online account at least once a month. You have to receive online-only banking statements, and you have to use your debit card associated with this account at least 15 times per month, all right? And so if you can jump over those pretty easy hurdles, you can get 7% interest on your $10,000. That is amazing. All right, so now you just have to consider which account is the right one for you. Here's a list of things you may want to think about. First is APY. Now, obviously, the higher rate is going to mean earning more, but don't rate chase at the expense of other important features. All right, number 2 is a minimum balance requirement. Some accounts are going to require a minimum balance to earn even higher APYs, okay? But you want to do whatever you can to avoid fees. The next thing that you want to consider is how easily you can access those funds, okay? You want to make sure you check for withdrawal limits and transfer times. Now, this one is very important. You want to make sure wherever you are keeping your funds is FDIC insured. Next is going to be user experience, okay? You want to make sure that whoever you sign up with has a good mobile app and a website, because it's going to make managing your money easier, okay? And then you do want to consider all of the additional features, things like the automatic savings and transfers and goal tracking, and can you have a checking account linked, all right? And I'm going to leave you guys with a few tips for your savings accounts, okay? First is going to be make sure you set up automatic transfers to your high yield account. Number 2 is, if available, make sure you use the roundup features. It's going to do a lot to help you save without necessarily thinking about it, okay? Number 3 is to make sure you are regularly reviewing your savings goals, okay? Number 4 is to don't be afraid to switch accounts if you find a better offer. And number 5, you want to actually consider using multiple accounts for different savings goals, okay? Especially if you go with a bank that doesn't have like a vaults or buckets feature. And so now what's your next step, all right? You're just gonna pick one of these accounts from the list and open one up this week. Just start where you are, start with whatever you can. It can be $100. Just get on the path and set up those automatic transfers. Now, if you found this video helpful and you want to dive deeper into why younger generations are struggling, then check out my video on why millennials and Gen Z are broke. That video is a really eye-opening look at many of the challenges facing our younger generation, and it's going to offer some practical solutions. So go ahead, open that high yield savings account. What are you waiting for? All right, and start making your money work for you. I really appreciate you tuning in. I will see you guys in the next one. I'm out.